Today, I want to talk about how another hedge fund has just shut down. I also want to talk about how a second bank run on deposits is about to start, and finally how more and more countries are banning short selling. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, as Kristen has tweeted, a New York hedge fund started in 1978 is winding down. So it says Vice managed $3.1 billion as of mid-2023, according to With Intelligence. The fund gained a small 6% in 2023, following a 0.6% loss in 2022. So this is yet another hedge fund shutting its doors after being in business for 46 years, apparently after making 6% last year. Now, while 6% is drastically underperforming the market for 2023, I don't think that's a reason in itself to close down an entire fund. What I think is more likely is I wonder just how much unrealised losses Vice was actually sitting on. They may have realised profits of 6% in 2023, but they may also have unrealised losses through 2023 from multiple different portions of the market. Maybe they've been shorting Nvidia and SMCI. Maybe they've been shorting small cap stocks. Maybe they've been shorting meme stocks. And maybe they've been long on the commercial real estate sector. All of the above would lead to massive unrealised losses, which would lead to a fund being forced to close its doors. Either way, this is just another hedge fund for biotech moose to add to his hedge fund wall of shame. Not much has been written so far about Vice multi-strategy advisors, but the CEO has said every journey has twists and turns, and after careful consideration of various factors and circumstances, I've arrived at the difficult decision to conclude this journey, saying the firm has diligently wound down the vast majority of client portfolios already, but obviously has some still to close, maybe the large unrealised losses. Now, Jim Bianco has also tweeted this morning about how New York Community BANKRUPT just fell another 7% to its lowest level since 1996. And as an update, at the end of the day, NYCB fell a total of 23% to a new all-time low. The NYCB stock price is currently lower than it was back in 2008 and 2009. This is the exact same thing that happened to Signature Bank and Silicon Valley Bank just days before their collapse. And as ZeroHedge has tweeted, a second US bank crisis looms as deposit outflows accelerated last week. So it says with the imminent expiration of the Fed's bank bailout facility and with the Fed's reverse repo facility seeing $128 billion in liquidity sucked out of it in the last 2 days, this week's excitement over at NYCB again is sure to have seen some depositors question their decisions. Basically saying the Fed is just about to stop supporting NYCB, and with their stock price hitting a new record low, tons of depositors, especially those with deposits over the FDIC insured limits, will be withdrawing from New York Community Bank, which again is going to cause a bank run at least on NYCB, if not other regional banks as well, leading to their imminent collapse. And again also showed this chart with these big red candles showing more and more cash being sucked out of regional banks across the US. Today in the Millionaire Mindset Trading Group, we traded FUN or PHUN, which got the morning breakout and released some news and ran for a total gain of 80%. You can see a bunch of guys in the group profited, like Big Swinging Dick with 23% gains, CSAMs who made $450, and Firefly who also made 25% gains as well. If you haven't seen from the testimonials on the MMTG website, there's tons and tons of people so far that have already been really successful, making use of the alerts and the educational videos. So guys, be sure to join the Millionaire Mindset Trading Group using the link in the description below, and remember the 100% guaranteed refund policy. And speaking of bank failures, Gold Telegraph has also tweeted saying the Swiss Central Bank posted an annual loss of 3.2 billion Swiss francs for 2023. This is yet another central bank taking another year of losses. Many central banks all took losses in 2022, and it seems that theme is continuing for 2023. And that theme will likely also continue through 2024 as well, as interest rates are still sky high. Many of these central banks and pretty much all banks across the US are hemorrhaging money at very fast rates. That's why so many banks are posting giant losses, why so many banks have already failed, and why so many more banks are still yet to fail. And you may also know I've also been speaking about B. Riley Financial, one of those hedge funds shorting AMC that is also on the brink of collapse. And this tweet says when B. Riley fails like Silvergate and Signature Bank, there will be heads rolling at FINRA, as this is a criminal enterprise that has been doing this rubbish for years. So again, soon another hedge fund that will be added to Biotech Moose's hedge fund Hall of Shame, along with potentially even more regional banks collapsing too. Now, Kristen has also tweeted about the other countries that are now banning short selling entirely. Now, that country banning short selling outright is India, but Thailand may also go after individual naked short sellers. It says market authorities in Thailand are considering changing the law so that both individuals and companies can be charged for such illegal trades. Existing rules only allow for punishment against security companies that submit the short selling order, but these rules are going to be bent, changed and updated to punish individual people. So again, this way it won't just be individual hedge funds being suspended from the Thai stock market, but also individuals themselves going to prison. And it says India's financial regulators have recently put new short selling rules in place after last year's alleged short and distort piece by Hindenburg Research. It says one critical safeguard implemented by SEBI is the mandatory delivery of borrowed securities. This directly addresses the dangers of naked short selling, a practice whereby sellers lack the necessary shares to fulfill their obligations. India have just made it so every single short sale must be matched with a real located share at the time that short sale is made, every single day. And finally, Practical Stocks has tweeted about AMC's short interest ratio continuing to go parabolic. You may remember a few weeks ago this figure was at 23 million shares, then it increased up to 28 million, then to 31 million, now to 33 million shares shorted. It seems this figure for shorted AMC shares is continuing to increase every single day, which again further proves the shorts did not close out of their short positions and if anything have just added more. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.